Hey, good morning. This is Mayor Valensky with Driving Markets. Hope you're all well. Okay, so the markets yesterday, the US and the European markets shot up yesterday. Mainly bargain hunters were out and about looking for good stock to buy, and that pushed the market up. However, in the last 40 minutes of trading, the markets came off, which means it came down a little bit, and overnight futures are down. The main factor is the non-agreement on the credit limit as far as the US is concerned. So what you've got is a debt ceiling which was introduced in 1917. The debt ceiling allows the government to function within the overdraft facility that's established by the Fed, and therefore they don't have to keep going back to Congress every 5 minutes to ask for permission. However, what's happened over the last 70, 80 years or 100 years is that the Congress and the US government keeps spending more and more money, and obviously the debt ceiling is increasing, and now, as I said many times, it's standing at 28 trillion. That's excluding what needs to be approved now. So there's going to be no further issuing of bonds or treasury notes until the debt ceiling is increased, which will allow the government to function. The longer it continues, the more risk there'll be a lockdown or shutdown in Washington, which will have a further impact on equity markets. In addition to that, there is an outside risk of America defaulting, but that's, as I said many times, that's very, very unlikely. So I wouldn't build on that. As far as dollar strength is concerned, you are going to get some dollar strength because there is rising cost of raw materials around the world, which means that it's going to have pressure on inflation. You can already see that inflation is rising, and therefore that's going to put a lot of pressure on central banks to raise interest rates. Interest rates will be going up. So let's not fool ourselves. Interest rates will be going up, even though economies cannot absorb it. If there is rising inflation, interest rates will go up. I know due to the shortage of petrol in the UK that a price of a litre of gas in the States or petrol in the UK, it went up to £1.36 a litre, which is the highest in over 8 years. That's not due to inflation, that's due to purely a shortage of heavy goods vehicle drivers for delivery of that petrol to the petrol stations. The debt ceiling is still there, the volatility in the markets is still there. If you're going to trade very cautiously. Again, small amounts, wide stops. Allow for the market to go against you, because it will go against you. Do not panic if it goes into the red. Hold on, and you should have enough money in your account to ride out the storm. You can contact me on Instagram, or you can comment on YouTube, LinkedIn, Google, whichever suits you. I'm happy to help. This is Mayor Valensky with Driving Markets. If you know anyone that needs any assistance in trading, then get them to contact me, and I'll be happy to help. All the best.